me your thoughts. We've had extraordinary action from the Fed over the weekend. We had a second repo operation today. Just talk to our viewers. What are you thinking?
So, I mean, listen, when you take what the Federal Reserve did, I think I called it last week awe-inspiring before I saw what they did yesterday or last night. And quite frankly, before what they did again today, I mean, the Fed is working, I got to believe they're working 24/7. They are, I mean, the things they're doing are bold. They're, we said it before that what was done in the financial crisis was innovative. You got to do that. You got to be creative, and they're throwing not only a lot of artillery at this, but it's durable. It's getting at the right places. I mean, the big one we got to get at is commercial paper. That is one that is hugely important for the markets, hugely important for the banking system. And my sense is, there's a series of hoops they've got to jump through to make that work, and they're on it. So anyway, I think what the Fed's doing is impressive. When you go through what you just described, or Eamon just described around the virus peaking a month to 3 months from now, you take what the Fed is doing. This would be the most epic rally we've ever seen. The problem is, gosh, when do you take the risk if there's such great uncertainty around that date?
And look, people are trying to game that out. You heard some of the folks who were on our show prior to you who suggest that now's the time to do it, that you're not necessarily going to be able to time the bottom. But, that's their own opinion. I do want to read you a tweet today from Mohammed El Arian, and I'd like your response to it. It speaks directly to what the Fed has done, and in some cases, what he says they haven't done. And then you can react on the other side. Am baffled and upset with the Fed announcement, as well as what it didn't announce. Baffled because measures more targeted at actual and potential market failures are more effective at this stage. Upset because of the damage that's being done to U.S. and global economic well-being. How do you respond to that?
So Mohammed's pretty thoughtful about perspectives on the economy and the Fed and monetary policy generally. Listen, I think it's very hard. I think when you're sitting in those seats and you try and determine how do you get at what is the most critical point in stress in the system, it's really hard, particularly when you don't have all the tools. For example, talking about commercial paper, they've got to go and get some evolution around 13.3 and work with Treasury. It's hard, when you think about what they've thrown at this and the time frame that they've thrown at it, i.e., they'll keep going. Listen, I think they're doing a lot of good things, and I think what they said yesterday, negative interest rates are not appropriate, but forward guidance and asset purchases are, and boy, they're doing that pretty aggressively. And I applaud them for that. And they're working on the other things, which just take a bit of time.
I was going to ask you about this idea of negative rates. I know that Powell doesn't want to do it. I think most observers and reporters have suggested that he doesn't want to go there. But is his hand going to be forced at some point?
I don't really think so. I mean, when you take rate to the zero bound, I would talk about this a lot. When you're in an aging demographic and you actually do more damage than good, because how it hurts insurance companies and pension funds and individuals. Asset purchases get at liquidity, get at the currency. It's much more efficient. So I don't think that is in their toolkit, and I don't think we'll see it anytime soon.
The op-ed today in the Journal by Kevin Warsh, let the Fed administer an antiviral shot. An emergency lending program would keep a liquidity crisis from turning into a solvency crisis. Your reaction to his comment?
I think that's right. You've got supply chain breakage, you've got cash drains around the system. The idea of that gets to that point about targeted initiatives that get at lending, get at cash drains across the system. That's a sort of innovation they've got to do, and I think that's really powerful. But I want to make one comment about what you were saying earlier. We're seeing valuations in some companies that are cash rich or free cash flow generative. They're going to have a tough month or two. When you put in place some of those initiatives like a lending program, those companies, you got to put them away. You got to do it in small size given the uncertainty of the markets. And you got to think about, gosh, I'm not going to hedge them because you look at the price action in gold, you look at where treasuries are today. I just want to own those companies organically, particularly if the Fed's willing to do some things like described.
You think, obviously, you're the CIO and head of global fixed income, but you think some stocks are too attractive to pass up even today?
I do. I mean, I think you got to be deliberate in how you do it. I think using some of the volatility markets, depending on where you can, is also interesting. But gosh, we're looking at companies that are good growers in technology, healthcare, building, construction, that are the multiple you're paying to cash flow, and you've got to haircut it for the next couple of months aggressively. But even when you do that, we've put down numbers where you shock some of these companies.
Rick, we'll leave it there.